Good afternoon. I'm glad we're not after lunch because people get tired, but now you all have had coffee, right? So thank you for Money 2.0 for inviting all of us to speak on this very interesting topic. In a recent article that I read at Bloomberg Law, it defined open banking as the ability to allow consumers to easily transfer bank account information and other data, a system where tech firms and other third parties create applications that can be added to a user's banking infrastructure. So with that, first, I would like our team to introduce themselves. So, Alyssa?
Sure. Hi, everyone. My name is Alyssa Rosanov. I've been working in finance for the past 10 plus years, focusing on small to mid-sized businesses, first in investment banking, later in structured debt, and for the past 6 or 7 years, trade finance, really helping small to mid-sized businesses with working capital and their international trade capabilities. Glad to be here.
Thank you. John?
Yeah, so I'm a serial entrepreneur that's been involved in tech and retail finance, banking rails for the past 13, 14 years, and also a huge crypto advocate, run several crypto-focused based companies, and love the concept of open banking.
Thank you. And a little bit about me. I am the CEO and founder of RAD LLC. We are a boutique compliance and internal audit consulting firm based out of California. And then, as I said, I have a dual role. My other job is I'm the Chief Risk and Compliance Officer for Mambu North America, which is a banking as a software solution based out of Germany. So with that, I'd like to ask my esteemed colleagues here a question. What does open banking mean to you? John?
So I like to think about it like we're in Money 2.0, but as soon as you leave here today, you need to understand that really it's Money 3.0. That's where your mind needs to be. So what does that mean? So Web3, these decentralized, private, public, distributed ledger systems really are going to form the foundation of what the future for open banking can provide in terms of throughput, capacity, decentralization, a new worldwide fractional reserve. I was just talking with these gentlemen out here, a new worldwide fractional reserve system where the governments aren't fractionalizing so much, but the forms of commerce have the ability to fractionalize the reserve of value. And when we talk about the transition, the evolution, these legacy systems start to really not be the way forward, and we really start focusing on these new distributed ledgering immutable systems.
That's a great answer. I would actually love to hear more about the crypto and open banking from your kind of perspective. From my perspective, again, I'm coming from financial services, obviously, and I'm dealing with a lot of small to mid-sized businesses. And to me, and obviously, lending to individuals is a big part of the financial services business. To me, open banking is really sharing and leveraging of customer permissioned data by banks, usually, with third-party fintech companies, with other technology companies, to really layer additional applications, services, programs, as in direct digital payments, as e-commerce, as marketing and cross-selling tools. And all that is being done through open API as opposed to just pre-API systems. It was being done in a screen scraping kind of tool, which is really just displaying the data as your bank account, and the tool that you're given the permission to is really using your credentials to log into the platform, which is obviously allowing a huge room for security breach and all the types of mistakes, both human and technological. And here, through OpenAPI, it really means it's a set of specific principles and specifics that allows that data to be transformed and interface in a much more secure way, which is obviously very important for fraud detection, and it's obviously very important for data aggregation and data analysis, which is part of what I'm doing, but we'll get to that later.
Thank you. Open banking has been, I guess, pretty well accepted in the UK through the PSD2 requirements. Now, it was part of Dodd-Frank back in 2010, but it just sat on the shelf until recently when Biden issued some executive orders encouraging the Consumer Financial Protection Bureau to come up with regulations and guidance as it relates to open banking. So my question to our team here is, what do you think the CFPB will do, if anything, and will it be, soon, or do you think regulations are going to take some time?
I don't see them really having to take many more steps to kind of fit this evolution of open banking, because I do think it's all about transparency of data, which at the end of the day, that's what these organizations are looking for, with, NMLS and some of these other components of these traditional systems. You already have the reporting and everything that's acceptable. So these new open banking APIs, I think, is a great way to look at it from the traditional sense. It really gives us the ability to tie things together, but yeah. Go ahead. I don't know if you have anything else on that.
Yeah, sure. I think we're going to have to look at the experience of other regions apart from the United States, right? And obviously the UK was the first one to really get that to the level of an open API or open banking system. But we can also look at Asia. And for example, Singapore, I think, sorry, that was South Korea that actually tried to launch an open API infrastructure, which is an aggregate API for all the financial services in the country. Because even now in the US, we have hundreds, well, generally in the world, we have hundreds of open API systems for banking, which makes it much less transparent, less efficient, and really costly, right? So Asia is a great example, but we also have to understand the mentality and cultural differences in terms of consumers being able and eager to share their data. In certain countries like China with Alipay and WeChat, etc., with Singapore, South Korea, etc. US is a little bit more conservative in terms of their data and consumers sharing their data, right? So it's a conversation about transparency, but also it's about the consumer and the customer wanting to share that data, which is not always the case in the United States.
Well, it's also about, when you have the CFPB, they look at things like, steering or doing things in certain areas that you're not supposed to be doing, and you have to collect a lot of data to be able to formulate whenever the regulatory body comes back at you. So when you look at these open systems, they have to be robust enough, and that's a challenge when you have personally identifiable information and to a very granular level, right? Like that information. So, yeah, a big part of open banking, I think, and we'll talk about portability here in a little bit, but a big part of open banking is, adhering to current regulations, but doing so in a trusted, verified way that doesn't expose users' data in a way that's compromised or large compromises happening. We have to figure that out. But I think it comes with sovereign identities and and portability. But we can talk about that.
Yeah, we're certainly going to touch on portability and accessibility here in a minute. But Alyssa, what is the need for open banking? Why is it important?
Why transparency is important, right? Well, first of all, I think, especially in my business, there's definitely a lot of fraud. So, according, if I'm not mistaken, according to the certified audit examiners organization, fraud annually happens for up to 5% of gross corporate revenue, which equals roughly $4 trillion in the world, right? I'm not talking about the US. It's really the world data, which is a crazy amount of fraud happening at various stages at various level. And I'm doing lending, and I'm doing different types of working capital and debt solutions for investments for small businesses whose financials are not even sometimes audited. Which really means, in the old school way, they would basically provide me with bank statements, and our analysts would analyze those, manually. In this particular case, with this capability of really integrating and syncing with their bank systems, we can analyze the cash flows, we can analyze the cash balance on a daily basis, we can predict the sales trends, we can analyze the diversification of their sales mix, et cetera, et cetera. There's so many levels of analytics that you can actually layer on top of open banking data that you can get in a very secure manner. So I think fraud is probably one of the most important things, but also it's obviously transparency, as you mentioned, John. Transparency and efficiency and the speed, right? And talking about...
And cost.
And cost, yes, absolutely. Yeah, I mean, cost-wise, I think we're still far away in terms of being cost efficient. But yeah, it's definitely a target.
Well, that's why I feel like, so that's where I feel distributed ledger technology, because you can port, value across these chains or across these ecosystems. And so, when you look at distributed store of value, you really have this ability to kind of bridge these hurdles, and the biggest one being cost. I think more people ask me about cost in these systems than anything else. And open banking, when you have to connect to 15 different things every time to get all this data, it can start to get expensive. Not just from the transactional side, from the upfront implementation side.
Yeah, absolutely. And there's one more important aspect that I think every single person here should think about once in a while is ESG, right? Environmental, government, social. And it's a very interesting impact of open banking systems. For example, in Asia, about 70, same in Africa, but even more so. But in Asia, 70% of people, Indonesia, India, and other countries, 70% of people, of consumers, don't have access to traditional financial services, right? They don't even have a bank account sometimes, but some of them do, but they can't,
Do you know how many of them have a phone? Almost all of them.
Almost all of them,
Yeah,
exactly.
with a connection. Maybe not
Exactly.
everybody in the family, but at least
Not
one
a credit
person in the
card,
family. They
but
don't
a
have a
phone.
credit card, but
Exactly.
they have a phone. So think about this.
That's what
very
China is
important.
doing, basically, analyzing the data from the phone. Exactly.
Exactly.
But you could basically help those people to get some kind of line, some kind of debt facility, if they need some money to pay their rent. You can analyze and predict their credit capability of paying the debt by analyzing all that data, because they don't really have a credit card, which means they don't have any credit history, and they can get any money if they need to. So it's a very important ESG aspect of open banking in the world and in the US as well.
Yeah, so to your point, you don't need brick and mortar, you don't need the old monolithic banking institutions. Sorry for anybody that's here from Bank of America or Wells Fargo. But to your point, you need a phone to do any of those transactions, right? You can get a loan, you can transfer money, all you need is a phone. So then we know what the needs are, we've talked about that, then what are the risks? I mean, we talk about the executive order by Biden that's asking CFPB to give some guidance, but there's already a lot of regulations surrounding privacy and data protection and lending regs and deposit regs, et cetera. So what are the risks with open banking? John?
There's two different types of systems. Let's look at it from the Experian hack that happened 17 times in the last 5 years. So, when you have these centralized systems that are storing copious amounts of data, that's really where you have significantly more risk. So, the big risks are if you're putting out a project and you're not doing things that would adhere with current regulation, then you as a business owner have a significant amount of risk. So don't go try to find like some obscure, open banking or regulatory, crypto regulatory. It's not going to happen yet. But if you adhere practices to what's already in the books and you apply these, newer, safer, open API technologies, you really are reducing risk, because I think you said it very well. You deal with a lot of fraud. And the thing that, NFTs, and if you start looking at title, so if we just start breaking down some use cases, and we start looking at things like title being, on chain, and the ability to reduce fraud in a mortgage when you have these types of, abilities to tie back, it really is transformational. So I don't think there's a lot of risk in the evolution. The risk may be in not evolving and staying with the old systems, really, frankly.
Which is always a risk. Things take time, and good things take time. To answer that question, I think there's definitely a lot of wiggle room in terms of data security. I don't think there is infrastructure that is agreed on by the major developed and developing countries, which creates a lot of error and a lot of inefficiencies, because, as I mentioned, there are hundreds of open banking API systems at the moment, right? So they are fragmented, which means they can't really talk to each other in a very synced and efficient manner. So I think, I don't know if you guys know, but there is this really great global affairs writer and thinker, Ian Bremmer, and he's been advocating for opening something like the UN, but just for data security and privacy and all the cyber kind of things. So there has to be some international law in addition to what we already have, in terms of like physical global affairs and everything else. But it has to be cyber law that's adherent to all the countries in the world that are really talking about the data security, the individual data, all the systems that can manage and regulate how these systems cannot be hacked. Has to be a multi-factor authentication process. Has to be a tokenized authentication process, and all those types of end-to-end encryption, and all those types of things that make sure it's fully secured.
Well, you just very eloquently described cryptocurrencies and crypto distributed blockchains.
You're welcome.
My screen went dead.
It's all good. It's all good.
So we talked briefly. We talked briefly about accessibility and portability of data, and I heard recently in a podcast that one of the gentlemen was talking about the portability. So, for example, if you want to change cell phone providers, you're with AT&T and you want to go to T-Mobile, you can take your number. You can't take your data history or the transactions that you've done, but you can take your number. The same thing with this in the case of banking. What does that mean to be portable or accessible? Do you take a PDF file of your transactions wherever you go? I mean, what does this really translate to?
So data will be aggregated and created more in real time in the future. You won't carry PDFs, you'll just carry around data points, and then you'll view them and be able to download them through PDFs. So what you're really talking about is the portability of the data. And when you talk about things like blockchains, the reason why they're so interesting in this field is because you really have the ability, if T-Mobile has its own blockchain or distributed ledger, and Sprint has their own distributed ledger, you can wrap the reference to the other distributed ledger in the new distributed ledger. So you always you always have this trackable thing. So now you talk about portability, where I think portability has the main future-looking implication, and it has to do with verification, AML, KYC, is in this concept of sovereign identity. So self-sovereign identity. So flip the model on its head. When you have Experian, you push your data into Experian, and then hundreds of people go to Experian through one API. It's open, but it's not very secure, and most of them aren't, and they're not adhering to the same standards. To where I would prefer to flip the data on the head, build a system that allows for the person to be portable within these systems. So there's a company called Global ID that we're partnering with that essentially decentralizes, sovereignizes the identity of a person and gives you credentials, KYC, you can tie in your socials, your wallets, and it really builds a portfolio. We're working on a credit scoring system that will go in there to give you a credit score. So now you're talking about, I go somewhere and I just want them to get my data. Oh, and I'm not talking into the microphone. I'm just loud. I'm loud enough to not need the microphone. So you talk about, me taking my digital sovereign ID and taking it. And now you talk about, well, how does it get secured? Well, you can give it to your friends or your family members, and they can be your backups, or you can just have it and have a passphrase. But you own the data, you own your life, you own your content. I think this is going to be the power of the future when you talk about where social media is going to start to go. So, you owning your data and you being able to track who, how, when, what they're using, giving access to it because it's all encrypted on your end. That's what
I like the phrase owning your data.
That's
I
right.
think Facebook would disagree with that.
They hate it. That's why we got to do it.
Exactly. Well, yeah, owning your own data is really, really important. But that's a great point about KYC ML because this definitely helps individuals to open their bank accounts, to get some debt, get mortgage, get some facility lines, get money for their business, etc., as well as small to mid-sized businesses to really get access to financial markets, financial services, etc. At this point in time, it takes a few weeks for a business entity to get a bank account. It's a long time. That's the United States of America. Somewhere in Europe, it takes even longer. I was just in Geneva a few weeks ago, and they were telling me that it takes three to 4 months for a business entity to open a bank account in Geneva. Very, very corporate, bureaucratic, old school. In a lot of places, yes, of course. And that's the problem. We're not helping businesses. And again, I'm advocating for small businesses because I'm working with them, and there's definitely a lot of, especially in the COVID times, there's definitely a lot of supply chain constraints. There's a lot of issues. There are a lot of cash flow constraints, etc. So these types of people need help. They need money, and what this particular open banking tool can help with is helping them get the money cheaper at a lower yield and more efficient and faster. So what I'm working as part of what I'm building in my company is credit scoring systems, and you mentioned that as well, so I'd like to talk to you after. So credit systems, proprietary credit models that analyze the data that's coming from open banking systems, the data that's coming from integration with ERP systems. Latin American countries have very interesting developments and advancements as well. They have what's called electronic invoices systems, which basically means invoices have to be reported to the tax authorities. So when you get in data from alternative data sources, and obviously in the US, data is private. We're not the UK where every single private company has to report their financials. So in the US, you have to be creative, you have to be very sophisticated to understand the risk. And yeah, Experian is doing that, DNB is doing that, but not to the level where I want to lend the money based on their analysis, to be completely honest, right? So you have to analyze it from various tools. And as long as you have that data verified and transferred to you in a more or less secure way through an open API with the bank, where you obviously trust the bank integrations and the bank security systems, etc. It gives you more credibility, and you can do it in a more efficient way as long as you also build in-house credit models to understand how that could be done and layer different types of analytical tools to understand what kind of risk there is. And even in-house, in your own company, you can automate and streamline the process, and you can allocate the workforce in a very efficient manner. If you know that this risk is particularly higher risk, then you probably want to spend more time analyzing and talking to those, consumers, customers, individuals, or small to mid-sized businesses, SME we call them. And, it just creates this kind of transparency and efficiency layer.
So we've talked about the definition of open banking. We've talked about the needs and the risk, the portability, accessibility. Who's going to drive this? The marketplace, the consumer, the banks?
It's going to be neobanks and fintechs. So we're working with credit unions right now. Credit unions are really the analog open banking, like let people participate system. But I think what's going to end up happening is these neobanks and these fintechs are going to come in, and they're really going to start utilizing systems that have transactions that are so cheap that banks are going to start to struggle. And so I don't know, that will drive some. Banks are not going to die off. JP Morgan's not going to die off. But that will force them to get rid of what I would call not inherently secure systems. They have to be secure enough to keep a margin. There's a calculatable risk there. So, these banks are going to have to get off their System 38s. They're going to have to start doing things different, but it's going to be, I think, a two-way street where the fintechs are going to come in and evolutionize these direct consumer models, cut out more middlemen, use systems that are trusted, verifiable, immutable, that they don't have to pay massive amounts of startup capital. Like, that's the other thing with crypto specifically. You don't have to have a bunch of startup capital to deploy these systems. So I think they'll drive this ecosystem that's starting to spin up over here with these neobanks and fintechs will start to drive the larger institutions to have to, because they're going to start losing so much market share.
Well, we're already starting to see that. I mean, if you look at some of the Goldman Sachs or Cities of the world, they have an open banking arm to their business line. So they have the regular retail distribution, if you will, the brick and mortar or the branches or online banking, but they're also all merging into the open banking space through a different line.
No, it's to me, that's just lip service. To me, it's not open banking. I mean, certainly things like Zelle, work in the U.S. But when we're talking about open banking, we're talking about being able to send money wherever you want in the world in 2 seconds, and you're trusted and it's good. That's open banking to me. Open banking is not SWIFT versus SEPA versus faster payments versus what is India versus, that's not open banking. So, yeah, that's my thoughts on that.
I think banks are always kind of behind, and I totally agree. I think the fintech companies and the disruptors of the world are really kind of crazy minds, but crazy in a good way, because they know the opportunity exists and they want to spearhead that opportunity. And in this particular case with open banking, I think open banking is just the beginning of it. You can always find so many use cases for open banking, and even cheap lending to individuals and to companies is part of it. Banks are not there. Even fintech companies are not there.
Even DeFi lending.
Right. So we have to, and there are so many expensive lenders out there. There's MCA, which is Merchant Cash Advance. Those guys are charging over 100% APR, and even non-bank lenders, mid-teens and higher up, is very, very typical for small businesses. It's really hard to sustain at that level of yield. So the point is to automate the underwriting process, which is really not done in, for example, in trade finance in my industry, but as well as lending and structured debt. Typically they use old school audit firms to do the analysis, collect the bank statements, the balance sheet, the P&L, everything that's coming out from
But that's
ERP
why emerging
system.
markets are so big, because you don't
Yeah.
have to lend as much into emerging markets.
That is true. That's why the opportunity there exists as well. Massive. China, Indonesia,
Africa.
India,
Africa's
Africa,
massive.
yes.
Probably one of the biggest opportunities right now
Mm-hmm.
is Africa. Their currencies are so destabilized, they're so disparate, but they have phones. Everybody's got a phone there.
Yep.
Well, Latin America as well, to a certain extent. Some regions, Latin
Sure,
America is very
sure.
diverse, certain regions, but yeah, I mean, we were talking about El Salvador earlier today, right? Venezuela could be following the lead, you don't know, right? Given their economic kind of circumstance, etc.
Yeah.
Well, thank you. We have about 10 minutes left. We can open it up to questions, but I also wanted to put it back out to you guys. If you had any examples or use cases that you wanted to share that would be for the benefit of the group. If not, we can open up to questions.
So I'll give an idea of what I just try to boil down how do I paint what I think open banking is going to be. So I'm not going to talk about my company just because I'm pushing it, but think about creating a loyalty reward system that allows people to earn directly from brands, okay? And it's a stable coin, and it's wrapped on whatever, it doesn't matter. And it's portable between, doesn't matter, whatever. ACH, you want fiat, you want this, you want Bitcoins, you want that. That to me is open banking. Like a company can come up, spin up whatever store of value micro ecosystem that they can think of, build a user base and a community around it. With our case, we're going to do wearables and allowing people to go out and create outfits, and it goes back to their phone, and then brands can reward people for being in front of the Eiffel Tower and stuff like that, or collecting an AR. So it's taking that ecosystem that I just created and now allowing people to bridge that value that's in there anywhere they want. That to me is open banking. So think about open banking less from a how do we get all these banks to talk to each other, to more how do I build a business and a community and a store of value that whatever the rest of the world does, it doesn't matter. People can take their value created in our ecosystem and take it wherever they want. To me, that's the paradigm shift in evolution of open banking.
And I agree on everything, but I'd like to add that it's important and useful for consumers and businesses to build those application layers and services layers in addition to what open banking already allows you to do. It could be robo-advisors. It could be bank aggregation tools. When you see all your accounts, you can really use that in a matter of a second. You can do financial management of your own account as a personal account or individual. To do savings, to do investments, to really robo-advise your business, right? Small to mid-sized businesses, SME financial management, helping them managing their accounts, help them managing with the cash flow solutions, with the projections, with the forecasts for their own business, as well as lending, as we've discussed before. So many use cases, and some of them I'm sure we haven't even thought of, but you can just build up on that kind of ground of open banking systems and transparency and efficiencies.
Well, thank you so much. I hope this was informative, and we can open it up to some questions now. Is there a mic there, or can't see?
Hello, sorry, I hope this doesn't sound too off. I myself prefer digital cards. I don't like to carry cash. But with the open banking system, you will have people that are just old school and prefer to be able to have cash on hand or whatever you call it. So how does that work with, I guess, in scenarios where somebody is like, hey, I need to go take out some cash, and like, how does that connect to maybe ATMs or different places to be able to take out actual physical cash, since we're still operating in that?
Well, if we look at what some countries are doing, some countries are making physical cash obsolete.
Right.
So China certainly is the forefront runner in that space, but very many countries are jumping on board afterwards. So the question really is like, why do you need cash? Like, so if you need cash, go get Bitcoin and go start being decentralized in Bitcoin or with Ethereum. Because what's going to end up happening is those decentralized systems are going to be the cash of the future. Right. Excuse me. Those decentralized systems are going to be the cash of the future. And the the central bank digital currencies are going to become the digital form of what they can track through banks, but a lot more trackable. Right. So, if you're looking to hold cash, get into the things that are decentralized now before it's hard to take your cash. Before it's hard to take your cash and put it in those things. Let's just say it like that.
And I think what kind of got my wheels turning in that perspective is that we're actually in a hotel that has gambling, and they will take the slips or the chips and they'll cash it in, and then they get cash back. So just trying to, I know eventually it will go to all digital, but you do have those people, and I know I have, like my mother, she is about cash. Of course, she's going to have to transition over, but until we get to that point, has there been conversations of maybe what to do in those?
Well, I think we continue doing what we're doing right now. You just keep using cash until you can't use cash anymore. Mm-hmm. I personally would not hold a bunch of cash on. I'd prefer to hold some decentralized currency, both because it has the large potential upside and also because it's portable, it's immutable, and I can take it. I can't carry $100,000 if I'm in Ukraine. I can't carry $100,000 across the border. I can tell each one of my kids, they don't know my passphrases, by the way, but I can give each one of them 2 words and we can walk across the border as the same as everybody else.
Exactly.
And I think you kind of have to look at that from a portfolio analysis standpoint, right? So you can't just have 100% of your money invested in one particular security or asset. Same here, right? Allocate just a few percentage points to cash if you like to, because cash is going to stay there for a while. It's always going to be Not always, but for a while it's going to be a hybrid system with
But
some
you're,
Bitcoin.
she's talking about like physical cash in the
Yeah,
business world.
yeah.
Businesses hold physical cash?
Yeah.
Businesses,
Well,
yes.
but I mean, okay,
Again,
some small,
some,
yes, okay,
right?
yes, okay,
Yeah.
yes.
Again, but
yes.
it's just a few points. It's
Yeah.
not even like 10% of your portfolio, and that's fine. I think that's normal, and everyone has bank accounts. It's not about that. I mean, I don't see any.
Well, I think most businesses are operating almost entirely digital right now. Most businesses, like if you're real estate, construction, insurance. I mean, premiums. Most of this stuff is not coming in cash, but there are some businesses that deal in cash. Certainly, I know some businesses that deal in cash, but I think that there's no really good answer for how do you bridge cash into the digital world. We're going to have to see how that
But I
happens,
think to
right?
your point, we're not going to transition to open banking tomorrow. And I think that it's going to run parallel to traditional banking, if you will, for a long time. I mean, to your point, I'm not going to get my parents to buy Bitcoin, right? They're going to use cash. So I think that there's always going to be opportunity for multiple things. I think that open banking is being driven by the more sophisticated consumer, the consumer that wants more for their money, that wants, faster lending opportunity, right, more investment opportunity than what comes from the traditional vehicles.
And in addition to that, sorry, I just thought about you just mentioned about Ukraine and stuff. There is a lot of risk and a lot of volatility in FX currencies in the world. If you use Bitcoin, there's no FX risk from a exchange perspective, which is really, really important because of historical volatility of a lot of currencies in the world. Sorry, go ahead.
I was just going to say, I feel like the Mirage handles a lot of cash. Yeah.
Well, I'd like to thank the panelists for being here. Really appreciate this. Is a really important topic and huge opportunity for disruption, right, in financial services going forward. Quick question about the dark side of all of this, cybersecurity, cyber hacks, threats. I mean, how do you feel, what does that look like in the future for open source and DeFi going forward, and how do you protect against that?
So I think that's where it's important to have because really most of the hacks, if you look at most of the hacks that have happened, there have been a few that have been. I don't like open source. You mentioned open source. I don't like open source in the sense of the code of a specific protocol, and there's a DAO, and then people in the DAO can vote to take advantage of some, or somebody sees the code before and then as soon as it's deployed, take advantage of it. So really those are your two, weak points in this whole ecosystem. So I think that, that's one big area, but the other part of it is the identification of people, the KYC and the identification of people in DeFi, because I think one thing that could happen very quickly is, when hacks happen, for example, they're able to freeze those assets. Exchanges won't let you take those assets off your centralized or decentralized wallet into your centralized exchange. So, when you look at about how hacks happen in the code, there's some risk there that needs to be cleaned up. But when code is out there and it's good and it's reviewed and there are companies that do this, I would trust code that I could read versus 25 people touching it back and forth. I think there's certainly more risk there. But then it comes to the identification side of things. The other risk here is that we need to ensure that we get maximum interaction or onboarding of new people into open banking by giving them the traditional methods of like identification, but also making it secure enough so you're not, how do you police, 10,000 companies who are holding financial information and they're all using different layers of cloud services and security and and firewalling and whatever else they can put, software layering, whatever else they can put in there. So, that's a hard model to regulate and to standardize. But when you go to these more open protocol, especially after they've been baked for quite some time, I think there's a lot more ability to take that self-sovereign digital identity, distributed digital identity, and if we can focus on those two pieces right there, I think we can solve the vast majority of problems that are going to exist in this decentralized, codified, immutable world coming up.
I think cyber would create, and is creating, but would create a lot of jobs. It's a very interesting industry. And it's also interesting how to see, talking about crypto just for a second, whether the SEC or other regulators would really cover the industry. So there's a lot of competition in terms of who's going to cover the industry. And like in the financial services, the SEC did not create all the rules and regulations on day one. It's an ongoing process, and I think it's always going to be the same in any industry because you're becoming more sophisticated as your criminals, bad actors, right, become more sophisticated. So more regulations will be coming at some point in time, and it's an ongoing process, which I think makes sense.
And we have the existing prevailing regulations, right, that control privacy and data security and things like that. So I still think that those are going to be overarching regardless if it's open banking or not.
I don't think there's much more certainly more maybe regulatory interpretation. I don't see a lot more legislation coming down the pipe, and I think it's because you're right. There are already good definitions we don't want them to come in and make a whole bunch more regulation just yet. There are already a plethora of definitions that if you really look down at what the technology's doing, and are you raising the security, do you need to be doing BSA checking and OFAC checking and, consumer protection is all what's involved here. And I think it goes back to, well, what are you doing? The laws are there, the legislation's there. Move forward, just do it in a regulatory compliant manner.
Do we have more questions?
Yeah, my question for the panel was one immediate small but meaningful step forward in open banking that's missing in the US is making banking information available for use for the purposes of basically credit granting. And that leaves a whole significant proportion of the consumer base outside of the purview of the formal credit system. So my question was twofold. Basically, what are the structural issues which have led us to this position? For example, Europe, the same information is available. Just the way every information on your credit trade line is available at the bureau, why cannot the aggregated view of your banking information be available, right? And that would solve a lot of basically sort of the access to credit issues that we have. So my question is twofold. Why in the US do we have this structural issue? And then second question is that who needs to take the lead forward in order to solve this? Does it need to be basically legislation, or does this need to be basically a coming together of the financial institutions? Because clearly coming together of financial institutions is not going to solve this problem because banks look upon that as a huge data asset.
Right. I'll let you answer part one, I can answer part two.
So to answer your question about, your first question again was, yeah, so if you look at evolution of, I think what we're talking about here is evolution of data, okay, because it's really important. So in the early web, you had the very beginnings of relational data, and data was hard to aggregate, expensive to aggregate, and until really you saw the proliferation of big data and the paradigm shift of how data was viewed, were you able to start getting other metrics, actionable metrics out of data. And now we're reaching this third phase where you're seeing this convergence of AI and this convergence of, digital systems that really anybody can build on top of very easily. And as soon as we take this paradigm shift of, thinking in the traditional form of where we are now to these new forms, and we allow these, I think it's mostly going to be driven by these micro ecosystems that spin up and severely displace, just like the Amazons and Googles of the world did. Those are going to be created here in the next probably 18 to 24 months. Is that fast?
And the answer to your second part of your question is, I think that's one of the things that I presented at the very beginning, is that who's going to administer these regulations? And right now it's sitting with the CFPB to kind of manage it, but you're right, it's not going to be the banks that are going to lead with it. We absolutely believe here that it's going to be the fintechs that really drive the behavior. Last question?
So let me just say I'm not in banking and I don't have any stake in this. So I want to talk as let's say a potential consumer of some of these products. All this structure that you talk about and security and everything else is fine, but I think the biggest challenge in this whole area is just understanding the basic concepts. You look at technology over the past several years, there is so much adoption of new products, new phones, new everything, yet you can't get a person to describe, or who's not in the industry, what crypto is. It's very, very complicated. And I think there's a lot of resistance to this whole system because they don't even know what it is and how it works.
So if we look back at Web 1 again, let's look at this. It's the same thing is happening here. We had Web 1, bulletin board systems, the very beginnings of, e-commerce coming up. You could do it, but it just wasn't easy. It wasn't intuitive. It wasn't simple, right? So my mom didn't do it. I did. Then we came into Web 2, which had that paradigm shift of how do we look at data and how do we build and how do we disperse information. That was really a big evolution and a paradigm shift. That's when people started mass adopting. I'm sure, how many of you don't use Amazon here? Do we have any non-Amazon users in here? No hands went up, for the record. No hands went up. Everybody in here is using Amazon, guys, okay? That's what we've got to focus on from a consumer. We've got to build simple systems. And that's why I'm saying the future isn't going to be, it isn't going to be a bunch of these systems coming together, I don't think. It's going to be people creating micro ecosystems, obfuscating away the things that people don't really care about. I just want to come here, play a game, do some banking, send it to my friend across the world, and I don't care about the rest. So the people that come in, the companies that come in and make it simple and make it intuitive, this is we're right here. That's where we are right now. We are in the transition of what Web 1 went to Web 2. We're on the tail of it. We're early, but we're on the very tail of it. You got to really start to act in the next if you're thinking about something, 6 to 14 months is where you really need to get an idea and go for it if you've got an idea in this space.
I think it's a learning curve at this point in time, totally agree. At this point in time, it's a learning curve for consumers, but it's also a learning curve for fintech companies that are trying to create their products as simple and as user-friendly as possible. Because, as you mentioned, even social media, my parents were not using computer 10, 15 years ago. Now my mom gets all her news.
Does
you
she
know,
like all your posts too?
She's blocked on my account. I'm just kidding.
Oh, that far, huh?
No, I'm joking, of course. But anyway, she's getting her news not from regular old school news sources like newspapers or television. She's actually getting it from Facebook and Telegram. And algorithms work that way. I mean, it's about how friendly those platforms are. And obviously, it's a target for all of us, for fintech companies, for banks, in the longer run, to make it as friendly as possible for a consumer to be able to see, hey, it's actually working and it's really easy for me to use.
I think need is going to necessitate knowledge. I don't know if you recall, I think it was maybe about 6-7 years ago, and I believe it was Chase that first came out with where they're sitting around a dining table and people are paying each other, right, for sharing in the expense of the bill or the dinner or whatever. That was the kind of the start of the whole Zelle or Venmo type payment feature. Now, for example, for me, we are going on a trip with 11 other people, and there's a lot of money going back and forth. And so we've implemented Splitwise, for example. So that was a need on how do we track all the money that's being spent, who spends, who's going to pay who. And then that Splitwise is also connected to Venmo and PayPal. So you can, for the ease of use, you can settle up. And those kinds of needs are going to have this industry evolve. And that's why I said in our discussion is consumers are going to drive this. Anything else? Thank you so much for having us.